Hey guys, Dave Keller here with Market Misbehavior. When I interview people, I love to ask them what their one chart is. And that is, if you had one chart besides a regular chart of the S&P 500 to get a good read on the market environment, what would it be and why? So here's my one chart for today. The chart of the S&P 500 using the AAII Rankings. And this is a survey, the American Association of Individual Investors, where they ask people whether you're bullish, bearish, or neutral on stocks for the next 6 months. Comes out every Thursday afternoon, and today the results were pretty dramatic. So last week we had about an even number of bulls and bears. So we had about 40% bullish, 40% bearish. This week that has taken a dramatic turn, and now there are 22% more bears than bulls. So if you look, 30% of respondents said they were bullish on stocks. Over 50% of respondents said they were bearish. And this is obviously with the market on a third big distribution week coming this week. So what does this mean? Well, if you look back to the left on the chart, and we're going back 15 years on this chart to get a good amount of history, it's actually very rare that this bearish rating has been over 50%, where over half the respondents said they were bearish on stocks. The most recent times that that's happened is the December 2018 market low, when we just touched the 50% level. Before that, you actually have to go back to 2016, where we just barely almost got there. Not quite, but we'll count it for the purposes of this discussion. And then before that, you're getting back into 2013 and 2011. The reason why I'm pointing out that this is very rare is I think a lot of people, a lot of investors are getting caught up in short-termism. So you look at a chart for the last couple of years, you see that this this bearish rating is so severely negative, you think, okay, this is lines up with previous market bottoms like we saw in 2018, like we saw in 2016. But my argument would be that the regime that we're facing now is different. This is not just a garden variety pullback within a secular bull market. I think this is a dramatic shift in sentiment overall, a paradigm shift from a bullish phase to overall more of a bearish phase that'll take a lot more backing and filling than we've experienced so far. And what I would point out is if you go back to 2007 to 2008 and 2009, this is when the market, again, rotated from a cyclical bull market to a cyclical bear market, really rotated lower. And you can see how often over half the respondents were bearish. From the 2007 high to the low eventually in 2009, this happened pretty regularly, a couple times a quarter, that this would go below the 50% level and often remain there for weeks and weeks at a time. So my illustration of this is, number one, caution you to not be too short term that you forget the long-term perspective. And number two, start to look at what we're seeing now from a breadth perspective to what we saw back in 2008, 2009, some of those historical bear market phases, cyclical bear markets, because I would argue that is more the environment that we're facing now. If this sort of thinking about your decision-making, investment process, and routines is of interest to you, hit subscribe, hit the little notifications bell so you know when I have a new video, and check out some of the other videos on my Market Misbehavior channel. Be safe. Thanks so much.